We have talked about cash coming in before, at, or after we earn revenue. I want to also show what happens with expenses. The cash can go out before, at, or after we recognize an expense. We've used the example of paying our utility bill, our electric bill. So if we pay the expense when the invoice shows up, we will debit utilities expense. Oops, wasn't $100, it was $50. And cash goes down $50. That's an example of when cash goes out at the time of the expense. If we had not paid the utility bill and put it in our top desk drawer with the intent of paying it a few weeks later, again, I would have debited utilities expense, but I also would have incurred a liability, and that is accounts payable for $50. Because the electric company has a claim against my business for $50. If I then pay 3 weeks later, I would debit this accounts payable, which brings it to zero, and credited cash. So the cash would go out. So that's an example of cash going out after I've incurred the expense. Let's take a look, however, when cash goes out before we incur the expense. And in that case, we'll imagine that the utility company, in providing the special service that they're going to charge us $50 for, has actually asked for us to pay for that service in advance. Let's say that this particular expense was for them to hook up a new plug or something. So in that case, cash would go out prior to this occurring. But in my case, it would actually be a deposit. I would be making a deposit on that with the electric company. So I would essentially be trading one asset for another. I would have a deposit, which is an asset. I have claim to that $50. If the electric company doesn't perform that service, I get it back, and my cash goes down $50. They then come and perform the service. That's when I incur the expense, and my deposit, I no longer have a deposit. So that is the case of where cash goes out before I've incurred an expense. Again, this brings us back to the point that there are timing differences between cash and income and expenses, and the reason why profit does not equal cash.